CFRA Research Chief Investment Strategist Sam Stovall has a target of 55.40 and joins us this morning. Sam, good to have you. I guess that 5% down wouldn't be that uncommon. Do you have any ideas what might be a catalyst?
Well, good questions about what specifically would be the catalyst. I mean, a lot of people say that it's the unknowns that typically trip up the market. And I like to say that unanticipated events are hard to anticipate. But I think it has to do with the 10-year yield, would have to do with inflation readings, as well as the Fed, whether they're likely to cut in September, et cetera. But also at the same time, looking at valuations. I mean, the S&P is trading at a 32% premium to its average PE over the last 20 years. Tech is trading at a 68% premium. Growth is at a 55% premium. So I think we're really stretched, and we've got to see some upward revisions to earnings estimates, I think, in order to justify that.
Right. You think sideline cash gets put to work, Sam, if in fact we start getting cuts?
Well, it is interesting because a lot of academic studies have said that sideline cash tends to stay on the sidelines, certainly more for retail investors than for institutionals. But the institutionals probably would, and I would actually think that they already have that money working because, they don't want to have another year in which they underperform the markets. They might not have gotten their bonus last year, but this year they might not keep their jobs.
Sam, we've been talking a lot about the lopsided nature of the market, how it's big tech and everybody else. So in your 5% drawdown scenario, what happens to big tech? Is that where the pullback comes, or does it stay solid?
Good morning, Sarah. Well, I would tend to think that the crack on the ice, if you will, would come from technology just being so weighty that the concept about AI doesn't at least hold it up sufficiently in the near term. When you look at the year-to-date performances, it's been communication services and tech outperforming the S&P. But since a recent top in the percentage of sub-industries in the 1,500 that were above both their 10 and 40-week moving averages, since that mid-May reading, we've now been in a sharp decline on that percentage reading. And at the same time, it's only been tech that's been outperforming the market. So I sort of feel as if this is a jumbo jet that's flying on one engine, and you wonder how long it can stay aloft.